I just thought I'd make a very quick video on how I like to try and find stocks that are breaking out. I think it's often quite good to do over the weekend because you'll have stocks that have had a bit of a run on the Friday, and then people sort of spend Saturday, Sunday digesting the news. And so what I'll do, very simply, I'll go into TradingView, I'll go into the stock screener. I have a little filter here that I have made called Reset. I'll click No, and so what Australian stocks on the ASX. So you can see here it's come up with 2,050 matches. These are some of the headings that I use. So you can work out how to add these yourself, but relative volume I quite like. So what I do is I set the relative volume to above 2, and so it just basically tells me find a whole bunch of stocks where there's been through. I'll then also do I want to find stocks where the price is above 0.01 cent. I think some of these 0.001 type stocks, 0.01 is probably a fairly good limit. And the other one that I do is I then set stocks to say I want to see there's been an above a 2% change. So I try stocks that have gone up significantly in volume, and I can sort by. I then want to find stocks where they've gone up, so the volume hasn't been driving them lower, the volume's been driving them up, and you can see I end up with about 67 stocks. And so what I then do is simply then go through the stocks and I have a quick look at the chart, and this is what I like. I like to see it's been trending sideways for quite a while. Then there's a great big spike in volume, and you can see then there's a fairly big upswing in the RSI, as well as my OBVs going through the roof. My onboard volume, on balance volume rather, has crossed over the 30 days, that red line. That's just my 30-day moving average. And so you can see that Reef Casino, for whatever reason, something's happened where a whole bunch of people have dived on board, and the stock's gone up quite significantly. And so on that particular day, it's gone up 8%. And so then the next thing that I then do is I go into ComSec, which is where I trade, and I have a look at the volume, because I always want to make sure that on the buy and the sell side it's not too gappy. And what I mean by that is sometimes you'll see on the buy side, rather than having a nice lineup of buyers at every sort of price point as it goes up, it might go from 5 to 20 cents, then to 25 cents, then to 50 cents, and it's sort of all over the place. So I try and find stocks where there's more buyers than sellers, and there's more volume on the buy side than on the sell side. So people are very much interested in getting into the stock, and then I'll often just buy pretty close to whatever the market price is, because I've got a good chance that the stock will go up. So anyway, there were 67 stocks through this list, and I've gone through and I've already whittled it down. So I've got my saved list up here, and I'll take you through the ones that I think are stocks that I'd like to watch tomorrow. And all I do is I save it as a watch list, and then tomorrow morning, probably around about 9:30 before the market opens, what I'll do is I'll put all these into a ComSec watch list, and then I go through the stocks and I have a look to see if they're going to open up. And what I mean by that is you can often, you can look at the ComSec, market depth, the buy and the sell side, and it will sort of say to you that, the stock might have closed at, well, in AB1's case, the stock would have closed at 12 cents. And it might say that when the market opens, it's expected to open at 12.5 or 13 cents based on the current market orders that are in the system. So if I see something like that, then there's a very good chance that I might place a bid on that stock, because more than likely it means it'll keep running on that open. So you can see here, this AB1's been trending sideways effectively for a little while, and you can see it's had this big sort of candle on them down here, which is always a good sign. And these things might only run for 1 or 2 days, so before they have a bit of a pullback. But I'm trying to get those sort of another 5 to 10% type movements that I can grab, and then all I'll do is I'll run I'll run a falling sell so that, you know, if I buy the stock and it does go up, I might have something like a really close, maybe a 5%, you know, falling sell. So if the stock does go up and it comes back down, I'm out at market, and that's the main reason why I like to make sure that, you know, there's depth all the way through on the buy side, so that if I do need to get out very quickly, then there's people at every price point, so I can get out if the stock goes the wrong way. So the whole idea of this strategy is you might buy, you know, 3 or 4 or 5 stocks, whatever it happens to be, and you only buy small amounts, and then what happens is, you know, 1 or 2 of them will run quite well and they'll run quite hard, and a couple of them you'll make a loss. So, you know, the whole idea is the worst you'll probably lose is 5% on each stock, but, you know, you might get 10 to 20 more points, you know, out of some of them. So anyway, this is just, you know, one of the ways that I like to try and trade with these, you know, little breakouts. I also do go through when I make my short list, I go through and I look at all the news that's come out, all the announcements that come out from the company, and so that way, you know, if there's something happening where, I don't know, the company's having a takeover bid offer, then, you know, those ones I stay away from. So it's only if there's some sort of good news that's happened on Friday, it's given the stock a bit of a volume boost, the stock's jumped up, you know, buyers are coming on board, and so I just want to be on that, you know, second wave. I missed the first wave, but I want to be on the second wave to ride it up a little bit, and I'll make sure that my falling sells get me out very, very quickly if the stock heads the wrong way. So AB1 is one that I watch on Monday. ATU. The other thing too, just to say, is that see where it's closed right at its high. So if you look here, it says that, you know, if you look in this area here, you can see that it basically closed at the high of the day. So the high of the day was 12 cents, and it closed at, well, you know, yeah, it closed at 12 cents, and you know, that's the high of the day at 12 cents. So any time where, you know, the candle doesn't have a little wick at the top or a very short wick, it means that demand was sufficient. So the candle, or the price basically closed at its high of the day before the, you know, the trading day ran out. So that's always a fairly good sign if you're trying to, you know, pick things in your favor. So from my perspective, I do try and focus on the ones where the candle has closed pretty close to the top. So the next one is Atrum Coal. You can see it's had 2 good days, and it just sort of shows you what I mean. You can see it's had one big spike, and so I missed that first trade, and in this case I've missed the second trade, but that's what I'm trying to get. I'm trying to get this second swing up that, you know, a lot of these stocks will have, you know, if they run for a couple of days. So you can see if I'd followed my strategy yesterday and I'd bought this one here, I would have got in roughly around about here, and you can see that's 20% that I would have made on that quick stock if I'd, you know, been doing this strategy in the day before. So that's the sort of quick gains that I'm trying to find. If I can jump on these stocks, I'm hoping for that 10 to 15%, and at the worst, I'm hoping to only maybe lose, you know, 2 or 3% if I get it wrong. So that's one that I'll probably have a crack at tomorrow. DHG is another one. So again, you can see, you know, a bit of extra volume came through. You can see it spiked up here. So again, if I'd bought that one, you know, having seen that extra volume coming through, and then I could possibly have gone, where are we? This one, this candle here. So from this candle here to roughly this candle here, you know, if I only got that far, you could see that's at least a 12% gain. And if I was somehow smart enough to pick the top, you know, 17%. So this is purely what I'm trying to do. I'm trying to look for these big sort of spikes in volume, get them on the second or third move, and just try and ride it until it ends. European cobalt, same sort of deal. I'm hoping, you know, fairly close to the top, so I'm hoping the next day it does that sort of spike up and, you know, lets me get onto it. Gallon lithium, same sort of deal. It's been up here before, so, you know, maybe that means that it might, you know, come back up, but, you know, again, nice big spike on positive volume. I like to see my RSI pointed up sharply. I like to see my, you know, my on balance volume looking like it's about to cross through my moving average. That should have been a 30-day moving average. So let me change that and see what that makes it look like. 30. Click OK. And so you can see it's just about to cross through. So again, that's a stock where it's high, so it might be worth a play. Hot chili is one that I've had my eye on for a couple of days. I meant to buy it back here, but I just didn't get a chance. You can see it has had a red day, so I would have exited out on that one. I probably didn't buy it because you can see how my OBV is below my moving average, so that's the reason why I didn't actually get into that stock. I do like to wait for the confirmation of the cross before I buy in. L&U is one of my favorite companies in theory. Like, I like the idea that they can, you know, I guess create text content, you know, out of videos, but it's never done particularly well as a stock. But again, you can see here, you know, it's spiked. My OBV is above it, so again, it's not quite as strong as some of these other ones. So it's probably one that I'd be quite cautious on whether I trade it or not. But you know, it's just an interesting stock that I like. It has had that volume spike. MEM, you can see again, you know, a bit of extra volume came through. It spiked it up, but you can see here it's done it sort of once before and nothing really came of it. Done it once before, nothing came of it. So this one I'd probably be a little bit less excited by, but you know, I'd probably still have a play at it. Not what's going on with these guys. They're basically a retail chain that sells, you know, products to, I think, Chinese tourists or something along those lines. And I think they bought a Chinese retail brand or something like that over in China, which allowed them to sell their products over there. But you know, it's having a very, very good run through here. Not enough history for me to be excited about it, but you know, one to watch. All I do is tomorrow when the market's opening, I just, you know, again, as I said to you, I just look to see if they're going to, you know, be higher on the open, and then I'll make my decision around which ones I get into and which ones I don't. Throughout the day, I might just leave this list open, and if I can see that any of them are green and you know there's a positive change coming through, then again I might buy them throughout the day. But you know, these sort of plays I typically like to try and get in on the morning. So again, you can sort of see on this one too, it's had a few good days. It's had a little bit of a reset. It's gone back up. It might go back again, and it might then, you know, might have a bit of a pullback and then run again. So it might have done its dash, but you can see how, you know, when the volume does come through, you know, the share price does move quite well. Rumble Resources, again, big spike, closed at its high, so it could be worthwhile watching the morning. Silex, same sort of deal, not as big a volume spike there, but you can certainly see that the volume has come through. You know, it's at the top of its Bollinger Band, so again, might be worth a watch tomorrow. So that's the stocks that I have shortlisted for my Monday morning open, just to see which ones those might continue that gap up type run. So, you know, the more that I can get where they have this second sort of big movement, that's what I'm trying to capture, and I'll literally hold these stocks for, I don't know, 2 or 3 days at the most. It just depends on, you know, when I automatically get out of my trade. So you know, as soon as I buy the stock, I set a trailing stop to make sure that, you know, whether I'm watching the market or not, if it retreats the wrong way by a couple of percent, then I'm out, and you know, my money's banked. So it's a super simple way of maybe trying to capture some of these second and third day big movements. Anyway, I hope that might be helpful to someone.